Happy Monday! I hope you're having a fantastic day. I hope you had a wonderful Sunday. It's quite fearful with those low dips in the crypto world. Hope none of you panic sold, but instead bought the dip. BTFD, buy that freaking dip. That's right, we were in a fear degree index of 10, so yesterday was perfect for buying. Oh, missed opportunities, never FOMO of fear of missing out, but just start buying when you can or get into it. Let's just dive right onto the news. Lots of news. I took a day off. But beforehand, please give this video a thumbs up, like and subscribe. If you want to take a look at my Patreon, it's up there. I haven't still posted that next video. I'm working on it. But let's just go straight into the news. Let's see what we got the world has to offer us. Woo! All right, so the IRS is looking into ways to monitor activity within crypto wallets. Ooh. Good luck, IRS. But let's read this article, see what they have to say. So this is by Matthew Desaro from the, what is this first? A BN Crypto. Okay. So in brief, the IRS is looking into ways to monitor activity within wallets. The proposed contract will aim to accomplish a few key goals. Let's see what they are. The Internal Revenue Service, IRS Digital Forensics team is looking into cracking tools for crypto wallets to tame the cybersecurity research into measured, repeatable, consistent digital forensic processes. As the population of the United States becomes more and more enamored with trading and purchasing goods within the cryptocurrencies, the IRS is looking into ways to monitor activity within wallets in order to keep themselves ahead of the game. The IRS has issued an official request for information, RFI, into cracking crypto wallets. Most traders use crypto wallets to store their digital assets, but also to add a layer of security. Crypto wallets use private keys to access funds separate from the broker making the actual transactions. As one might expect, some are using blockchain to hide illegal or illicit activities. When the IRS Criminal Division has to look into the financial records of certain people, however, they are hitting a wall when trying to see information from seized crypto wallets. In an official request for information posted to sam.gov, the Treasury Department and IRS states, though a few known cyber penetration testers have published vulnerabilities on specific devices, the process of decrypting the hardware devices to gain access to the wallets has been challenging. The explicit outcome of this requirement is to tame the cybersecurity research into measured, repeatable, consistent digital forensics process that can't be trained and followed in a digital forensics laboratory. So yeah, they're having trouble on getting into people's wallets that they've stolen. Yeah, that's a hard wallet for you. You set it up, it's your private keys. Unless you give up those keys or that password, the IRS can't do nothing. Sure, there are some hacks out there, but yeah, let's continue. The IRS says they require tools and processes that would be usable with any crypto wallet currently offered to customers. This includes software and hardware models. The posted RFI doubles down on this idea by requiring the ability to analyze software, reverse engineer hardware, and the deconstruction of printed circuit boards and integrated circuit packages. The proposed contract will aim to accomplish a few key goals. A few of these goals are to validate cybersecurity, research in crypto wallets exploration, identify new methods of accessing crypto wallets, identifiable, usable cryptographic models for exploits, and document the processes, hardware, and skills needed to reproduction in advance for digital forensic labs. So yeah, they don't have the stuff yet, but they're working on it. But yeah, get yourself a hard wallet. What else can you do? The IRS is going to be trying to go after your money. Keep it hidden. Don't give them. Keep doing your own due diligence. Keep your stuff protected. Hide it. Never give away your seed phrase. Never take a photo of it. Never share that information with nobody. Don't put your money on exchange. These guys will get it. When it comes to Trezor wallets, I will let you know. I definitely trust Trezor, but there is a hack to it. If someone would ever get their hands on it, there's a 15-minute hack where they have access, a 15-minute window to get into your wallet. So they can, if they got it physically, they have 15 minutes if they know how to do that hack to get your money. So treat your hardware wallet very safely. Hide it. Get a couple safes. Keep it with a relative in another state in their safe. do whatever you can to keep your money protected. Don't let the IRS take your stuff from you, or don't let thieves take anything from you. Scammers out there are always doing stuff. Yeah, I don't want to get off topic. Let's just move on. After yesterday's video, or Saturday's video, whew, I just kept going off on some of that stuff, but let's move on to the next article. Bitcoin bounces after week-long capitulation event results in 14.2 billion in losses. Bitcoin price briefly tops 40,000 and Ether climbs of 2,600 as traders gain their composure following last week's historic deleveraging event. Oh, look at that. It's a little horse with Bitcoin jumping a hoorah! I love the artwork. Crypto traders were greeted by green markets on May 24th as majority of altcoins saw their prices bounce back following last week's downturn. That was the largest how come I cannot say that word? Deleveraging event since the March 2020 sell-off, according to an on-chain report from Glassnode. After suffering the biggest monthly price drop in Bitcoin BTC history, bulls now look to stage a comeback with significant amount of support forming near the 37,000 level. And within the last hour, Bitcoin's price pushed up back to the 40,000 level. Woohoo, Bitcoin! Yeah, way to go. The capitulation experienced last week was one for the history books, with the data from Glassnode showing that the magnitude of realized losses on-chain eclipsed all previous capitulation events, with an all-new time high of 4.53 billion in losses recorded on May 19th and 14.2 billion recorded for the week as a whole. So here we go, January, February, we had a 0.096 billion gap. November 2018 was a 0.94, March 2020, 1.43, and then February to April was a 1.5 billion. Woo! The 2.56 billion in net on-chain losses seen on May 19th was 185% larger than the March 2020 COVID-19 sell-off, with data indicating a large cross-section of the market was taken by surprise by this event. Not all traders were caught off guard by the move. However, as BTC holders with coins 1 to 3 years old managed to spend their coins early in the cycle, likely rotating capital to capture the price outperformance of Ethereum at the time. These entities then stopped selling during the capitulation, while newer hands were seen panic selling. They sprinted for the exits. Overall, last week's historic capitulation event resulted in roughly 9% to 9.5% of the current market capitalization, registering as unrealized losses, which is actually quite small when compared with previous losses seen in March 2020 and November 2018. Ooh, here are those demographics looks, graph charts. I haven't seen graphs since chemistry. Missed those days. Can't we start doing some backyard chemistry projects? Short-term holders have borne the brunt of the market downturn and currently hold aggregate unrealized loss of 33.8% off the market cap on their coins. Hard hit altcoins bounce back. May 24th price turnaround was welcome sight for altcoin market, which was hit especially hard during last week's sell-off. One of the biggest gainers on the day has been Polygon Matic, which continues to receive extra attention from the cryptocurrency community as it emerges as the preferred layer 2 solution for Ethereum network. The added focus led to a 100% increase in the price of Matic on May 24th from a low of 83 cents on May 23rd to intraday high $1.67, while the maker's MKR token likewise saw a price rally more than 100% to a high of 4,174. Woo! Look at that sea of green, people. Today was a great day. I just couldn't stop looking at the market. May 24th market turnaround also resulted in a 30% gain in the price of Ether, back to the $2,500 support level, while Binance Coin managed to gain 39% and now trades near $320. The overall cryptocurrency market cap stands at $1.68 trillion, and Bitcoin's dominance rate is 44.2%. Way to go, Bitcoin. Way to be the king. And that is that news. So, woo! Bitcoin bouncing. I love it. So let's just move on. In this article, Ethereum steps up as rails for new capital markets. The European Investment Bank issuance of a 100 million 2-year bond on Ethereum shows it's the rail of the future for insurance. Let's see what the little photo is. Everyone loves the artwork. It's just Ethereum. This kind of reminds me of a video game. I don't know. It's not Halo. What's the other new one that came out for the PS5? No idea. Didn't play it, so I guess it doesn't really make sense. Oh well, let's read the article. The bond issuance by the European Investment Bank, EIB, via the Ethereum blockchain, and not a closed permission blockchain, shows Ethereum is the rails of the new capital markets, according to Seamus Donghu, vice president of the digital asset infrastructure company Metaco. Bond issuance on the blockchain via tokenization often gets forgotten about in the era of high-yield DeFi or volatile cryptocurrency markets. But historically, the 280 trillion bond market, with its relatively safety and stability, has been a critical backstop for many investment portfolios because their digitization is key to making digital assets go mainstream. To have this all be worthwhile, the protocol to be tokenized bond is offered on needs to match up their issuer with liquidity. Blockchain flavors. Blockchains comes in 2 flavors, permissions and permissionless. Permission chained like R3 Corda or Hyperledger are closed off to the general public. The nodes that run the chain are between members of an ecosystem. An example could be a consortium of banks running a blockchain between themselves. In contrast, a permissionless chain like Ethereum or Bitcoin is open to the public for use and inspection. Critics or permission chains say that they aren't really blockchains because of their walled garden nature. Bond issuance on permission blockchains has been tried before, but it hasn't caught on yet. That's right, it's permission. That's right, because permissions is centralized. Everyone wants the decentralized thing. We don't want someone in control of our money. For all the crypto people out here who know and understand the blockchain technology, sure, we're here to make money because we like making it, but we also believe in what the blockchain can do. The blockchain can just, it's it's like a digital notary. What else can you do? We don't need a person to do that no more. We have computer programs, and that's blockchain. It can store data. It can save the internet, like I always say, but it will get easier over time. So yeah, we don't need permissioned blockchains. All right, let's see. Although Gartner might say that 2021 is the year enterprise blockchain, perhaps there's a reason when Consensus acquired JP Morgan's permission blockchain technology Quorum, they started pushing a permissionless version and provided tool support over this new version. The EIB issuance wasn't on one of the permission chains. It's really obvious. The markets looked past that, and also these participants looked past that and went to where the liquidity was, which is on public blockchains. Donahue said the block works. The point is they need to have an interoperable sort of framework so that they can raise money on a public chain where there's demand and liquidity. Institutions want interoperability, while Donahue says Ethereum is enabling the ability to put the entire capital markets on blockchain in a trustless, decentralized, and distributed framework. The future isn't exclusively tied to it. Similarly to how panelists on a recent Blockworks webinar view the future of programmable money as a multi-chain future, with Ethereum at the center, supported by other interpolable protocols. Donahue said that this is an institutional finance clients want interpolability. Man, so many words I just cannot say. Is that just me, lack of reading? Hopefully all of this news articles will help out with that. So as he says, we deal with banks and their focus is not on a single channel. Ethereum is definitely the dominant one, but this view is it could be on Tezos. It could be on Polkadot. We even see interest in tokenization on the Stellar blockchain, Donahue said. More blockchain-based bond issuance are on the way. In recent earnings calls, Singapore's DBS Bank identified it as an area they are doubling down on in the future after the success of Azalea Investment Management, Temesca Private Equity-backed bond, Astria 6 on the city's ISTOX digital asset exchange. Donahue thinks many of them will be for public debt. If you've seen the amount of government debt that's been issued of late, it's a growth industry, he said. Okay, yeah. Good job, Sammy. So yeah, Ethereum, the new one of the thing. Are we going to go centralized or are we going to go decentralized? You decide, people. Just do your research before you do anything. Okay, continuing on. Coinbase looks like they recruited former White House advisor to a new policy role. With the expansion comes a greater focus on policy and regulatory issues. Coinbase hire comes with decades of experience in the public and private sectors. Look at that, nice little artwork. Let me pin this thing on you. Yes, Mr. President. Oh, yeah, okay. I don't know if I'm tired. Sorry about that, people. Let's continue. United States cryptocurrency exchange Coinbase has tapped Ferrari Sherzad to fill the role of chief policy officer at the firm, signaling its continued commitment to meeting the evolving regulatory landscape governing digital assets. In joining Coinbase, Sherzad left a 15-year position as global co-head of the Office of Government Affairs at Goldman Sachs, where he played a leading role in managing the firm's government relations and public policy strategy. The exchange said in Monday blog, in describing the role of the new chief policy officer at Coinbase, Ferrer will engage with lawmakers, regulators, and other policy experts to realize crypto's full potential to fuel a more equitable finance system along with job creation, GDP growth, and innovations. Prior to joining Goldman Sachs, Sherzad was a member of White House's National Security Council and also served as a national security advisor for international economic affairs. Way to go, Sherzad. You are really overqualified for this. or you are just the right amount qualified. I think you're just the right amount, because with what I'm seeing here, I'm not going to finish this article, but with what I'm seeing here is like they got the best of the best. Let me go a little bit further for you. Bam, yeah, so these guys, Coinbase, got the best of the best because they see themselves as one of the next bankers of the world, of our future of digital assets, our digital world. We're going digital, so get on board, people, or keep living the paper lifestyle. But they got JP Morgan's guy who did their previous affairs with the regulators. They're getting comfortable with the government. So, yeah, Coinbase an exchange that works with government. They work with the IRS. So if you do business with them, you're going to have to play along with the rules that get placed. But yeah, that's just what's going on with Coinbase, and that's my little spiel of what to that article. Alrighty, so let's just move on. But yeah, way to go, Coinbase. Congrats. I hope this does really well for you in the future, and I think it will. Okay. Let's see. So what is this article? Boom. Oh, no. Whoa. Sorry. I clicked on an ad on my side. Sorry. But Augur launches Augur Turbo on Polygon to expand sports betting program. Woo! It's really two ways you can go in crypto world. Betting or currency. Which you want to go, unless you can find another use for it. But that takes a really smart person. But these guys went into the gambling section. All right. So, in brief, Augur announces launch of new sportsbook Augur Turbo. And Augur Turbo will live on the Polygon Layer 2 network. Cool. So, blah, 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 blah. Augur is a decentralized prediction market founded on Ethereum ERC20 protocol. Originally started development in 2014. Augur is one of the pioneers of the crypto prediction markets with the aim to democratize and decentralize finance. Prediction markets like the one Augur uses primarily rely on the wisdom of the crowd approach. The move to betting on Polygon will cut down on Augur fees, which at times can supersede what the bettor wins in the first place. Augur argues that traditional betting exchanges are highly centralized and introduce a larger number of restrictions on users, such as limiting payouts and withdrawals, siphoning fees of 5% to 10%, and limiting the types of markets that can be created. Augur Turbo will integrate Chainlink's Oracle network to enable users to create their own betting markets for Major League Baseball, the National Basketball Association, various MMA promotions, and the Olympics, among others. Data such as statistics, scores, and schedules will be delivered via Chainlink. More importantly to bettors is that data to settle bets will be immediately available after the game ends on market close. In April, Polygon launched a $150 million fund with a goal to make DeFi more accessible and cost-effective to onboard the next million users. Back then, the project said that a slew of high-profile DeFi platforms such as Curve Finance and Aave had launched on the network to offer faster and cheaper DeFi and open the industry up a little more. There have been more protocols seeking layer 2 implementations, and better scaling solutions on Ethereum network has been strained under the increasement. For example, stablecoin infrastructure protocol mStable launched on a layer 2 network for faster and cheaper transactions. It also chose the Polygon platform as the primary reasoning behind this to avoid the congestion on the Ethereum network. Okay, so I saw something right here in that article that just spoke to me. What was that? More importantly, better is the data to settle bets. Well, right here. Boom. So more importantly, to bettors is the data to settle bets will be immediately available after the game's market. Woo! That is pretty nice, because I'm pretty sure that's a big struggle in like the game sharks, barkers, gamblers, game sharks, or something sharks, head sharks. I don't know the name for that. What you call those gamblers who take bets on extreme things and they got to take your money back. I don't know what it is, but this solves a huge issue. So yeah, blockchain technology, baby. Solving even issues in the gambling and betting world. So yeah, you get payments directly. Like once the game's over, it's boom, settled. You don't have to wait on the person because the funds are already there and the program gets taken place. Boom, that's a decentralized. You're not waiting on a person or anything. Once something's set, you have smart contracts to implement the program within the blockchain. So this is some great stuff. Woo! I am loving the future of crypto. Okay, so let's move on. For good news for America, after Saturday's US Europe will be the top miners of the world, but Marathon plans Texas facility that will house 73,000 Bitcoin miners. On May 24th, Marathon Digital, Marathon Digital announced plans to build a new Bitcoin mining facility in partnership with Compute North. The new facility will house 73,000 ASIC miners in Texas and will, the firm promises, be approximately 70% carbon neutral. Woo! Carbon neutral. Thanks, Elon, for pointing that out, even though we've always been at 70% carbon neutral or more in most companies, as we found out. Marathon estimates that its total hash rate will grow to 10.37 hertz per second, achieved at a cost of 4 cents, basically, almost 4.5 cents per kilowatt. Kilo WH. Hertz. Shares of Mara and almost on the news. If somebody knows what KWH stands for in the E hertz or EH, I would really love to know. Just leave a comment down below. That one person watching this live. I don't know if that's my buddy or not. No, he won't know. But okay, yeah. So continue. When contacted by the block, a representative for Marathon declined to specify what the new facility energy mix will be, as well as how the firm plans to hit its benchmarks for carbon neutrality. Back in October, the firm made a similar announcement of a new facility in Montana in a partnership with Beowulf that has seen a struggling coal-fired plant turned into a lucrative Bitcoin mining center. Woohoo, that's good. US-based Bitcoin mining has been on the rise in recent months. While most mining has historically happened in China, new governmental crackdowns have seen the hash rate leave that country. However, the US has its own compliance concerns to contend with, among which is a regulatory push to reduce coal usage. In countries' energy mix, many of the latest generations of mines are indeed setting up shop in coal plants that had shut down as energy-saving measures made them less necessary. Questions linger as to whether these miners will be able to follow through on promises to offset their emissions. Another critical regulatory concern facing Bitcoin miners in the US is the responsibility for whose transactions they verify. Marathon's pool took the controversial step of validating only whitelisted Bitcoin addresses in an effort to comply with sanctions regulations. Okay, what does that mean right there? Does that mean they're saying like they're only working with clean money? Or the in quotes? Because what's the problem with bad money? A crypto wallet was hidden or used for illicit use back in the early 2010 years when Bitcoin first came around, and then now they're being used, so it's considered bad money. I think it's a missed opportunity for confirming hashes, but oh well, you do you, Mega Factory. Let's move on. Bringing blockchain back to the people, Shift Network partners with Parsec, Ooh, so we got Parsec times Shift. I don't know who these guys are, so let's read the article. For those of you who have your money invested with these guys, I hope you did your research, but let's see if this news helps you out, because this channel is all for you people. This is to help you out with your research and gain some knowledge of what's going on in the world, the crypto world. So Shift Network, a public blockchain protocol aggregating and embedding trust and validation for data sets, announces partnership today with Parsec, a blockchain automation and analytics platform. The partnership envisions bringing the ownership of data back to the people by facilitating both permissioned and permissionless networks, bridging siloed data sets, and bringing workflow automation and industry-grade analytics to a wider public access. Parsec's technology brings a key integration to Shift Network by providing a real-time notification and alerts on transactions data processed across the blockchain. Shift's credentials verification platform enables sender identity authentication to foster new economies of trust. We are very excited this particular integration. We are a decentralized network and look for exciting and powerful tools that enable our developer community to do more on the Shift network. Parsec's technology has a natural fit with our identity and compliance related partnerships. Shared Shift Network co-founder Juan Asia. The partnership with Parsec will see Shift Network developing technical integrations across its ecosystem of blockchains. Parsec blockchain infrastructure creates a secure bridge between on-chain and off-chain systems by hosting smart triggers which process real-time data streams on-chain and push these data sets to trigger off-chain actions. This process opens blockchains to automation functionalities, as well as opening blockchain data to real-world applications. Digital identity authentication and verification is core infrastructure for the future of multi-chain, DeFi, and Parsec is excited to create smart triggers to protect users and platforms. Parsec's position as a push-based data system is very valuable for protecting digital identities because our triggers can be structured as alarms. If a user identity is compromised or under attack, Parsec can monitor for strange activity and provide real-time updates to user and platform compliance teams. Shared Parsec's head of business development, Tom Mata, notably, Shift Network was chosen as a partner by Binance, an industry-leading crypto exchange firm. The resolve bottlenecks in the Financial Action Task Force FAFT Recommendation 16, also known as Travel Rule. With this travel rule, crypto exchanges such as Binance are required to share users' personal data whenever digital asset transactions are processed. Ooh, so look at that, people. Don't keep your money on Binance. They're an exchange. Most of the time, they don't have the right to or they don't need to, but if this is going the way it is, looks like they will report you to the IRS, but be safe, people. The FAFT travel rule is an extension on modification of the 1970 Banking Secrecy Act, expanding its domain from banks to financial institutions, of which crypto exchanges handling mass transactions are included. Shift's digital reputation management provides a secure identity layer to contextualize personal data from users to exchange without violating a user privacy. Shift Network brings this owner consent basis for building a credibility framework, incentivizing individuals and enterprises to collaborate on contextualization of data. Shift also has been chosen for integration with Polkadot as an identity layer, providing the network is also partnered with Polygon for the development of opt-in compliance infrastructure. Woo, way to go. Yeah, so lots of things are happening in the crypto world among exchanges, networks, and everything. They're just working together to make this just more mainstream, and I love it. Okay, so let's move on. Wow, I still have a lot of articles to get through. Let's keep reading these down, people. It was a long weekend, and yeah. Riot Blockchain names Benjamin Yi executive chairman. Ooh, cool. Riot Blockchain, NASDAQ Riot names Benjamin Yi an independent director on its board as the company's executive chairman. In addition to Yi's having served as director, as far as Z's, I'm sorry, served as director of several public and private companies, he also brings more than 16 years of experience in capital markets, particularly in fintech-enabled businesses, specialty finance, and special situations investing. The company appoints Huber Marleau as lead independent director as of today. Riot also names private investor and entrepreneur Lance D'Ambrosio to the board as independent director. D'Ambrosio has founded and grown several companies across a number of industries, including telecom, materials, and automotive. Ooh, so cool. Riot Blockchain's got a new chairman. Good luck, Benjamin Yi. That's all I have to say. Salute. Alright, let's move on. Cointelegraph consulting DeFi projects launched on Polygon. Usage skyrockets. Woo! Strolling through the numbers of the Aave and 1-inch versions of Polygon as the network gains momentum. Let's take a look at this. Look at that little artwork. Everyone's chilling. Got the blockchain going around you. That seems more like a chain link type of thing. But yeah, cool. That's blockchain. That's like nodes all connecting. But I like the artwork. We got yoga people. All right. But in the midst of the hectic crypto market, the gas fees in the decentralized finance DeFi sector have skyrocketed, once again highlighting the value of layer 2 scaling solutions. Cointelegraph consulting team up with Covalent to discover the numbers behind Polygon, the network that is onboarding an increasing number of decentralized applications from SushiSwap to BZX. Aave's DeFi's lending giant launched on Polygon this April and has already lured away about 66,000 unique users to Layer 2 version. Nearly 12 billion has been deposited since the launch, and over 7 billion has been borrowed. Though what is important is that only $158 has been spent on gas across the entire Aave Polygon version. Notably, the major fraction of borrows involves stablecoins with USD coin, so the USDC, or DAI and Tether, USDT, making up roughly 60% of borrowing in Aave's Polygon version. In fact, the breakdown of borrowing reveals that Aave managed to execute its strategy that prevents users from risky borrowing against volatile assets, which in turn usually leads to liquidations. Okay, so Aave's data unique address on Polygon. Aave's gas cost per day. So look at it go down. Nice. And the daily transactions count. Alrighty. So hot off the heels of 1-inch network's launch on Polygon on May 12th, we take a look at its usage as well. 1-inch on Polygon has reached almost 18 million in daily swaps by dollar value, with the most swaps denominated in USDT, wrapped Ether, USDC, or DAI. There have been nearly 10,000 swaps facilitated thus far. The platform has already facilitated $43 million in swaps, but only $25 in gas fees was used to swap this amount. Whew, that's a cheap gas fee. Amid Ethereum network congestion and rising costs, Polygon is gaining momentum due to its astonishingly low transaction fee. With more DeFi projects pursuing multi-chain strategies, Polygon could onboard more projects in the near future. For more charts, market signals, and carefully curated new analysis, download the full edition of this issue. Yeah, so there you go, people. If you want more charts and graphs, download it. This is on the Cointelegraph news. So take a look. Let's move on. We're getting there. Russia. Duma emits amendments to allow crypto payments as contractual medium. Woo, we got Litecoin, Bitcoin, and Ethereum. Look at those beauties. Definitely I see them as top dogs in the near future. But that's just me from my own research. Don't take my word. Do your own research, people, and come up with your own conclusions. Don't just listen to anybody on the computer telling you to invest in something. I'm just a guy who works as a stock boy, but I give you the news because I want to know the news as well. So this helps me out and this helps you out. So win-win. Okay, let's continue. The pace of cryptocurrency adoption across the world has been fast-tracked lately, with hundreds of lawmakers now vocally advocating for it. Russia has been witnessing a similar trend as well, and now certain lawmakers are seeking to allow the partial use of cryptocurrencies in the field of payments. According to a report by Interfax, the chairman of the Russia's Duma's Committee on State, Building and Legislation, Pavel Krashenikov, has announced the government's decision to amend the civil law to allow cryptocurrencies for payments as contractual medium. Krashenikov stated, "We believe that it is necessary to make amendments to the civic code. Now we are in the process of an appropriate approval procedure, but there is an understanding that so far they have called it so. Digital monetary unit it is. Of course, Not a legal means of payment, but this means of payment is quite possible. Can be contractual as contractual means of payment. Sorry for that was my Russian accent. That was totally not Russian. I'm sorry. I'm sorry, Russia. For a long time, Russia has kept cryptocurrencies at bay. In fact, for the use of cryptocurrencies was banned by the country earlier in 2021. However, now the developers of the amendments to the Civil Code believe that digital assets can be used within its framework and contractual law and be of contractual nature. We believe that this is property. As every other government has proclaimed. While Russia does allow the partial use of cryptocurrencies, its central bank digital currency is expected to take important steps soon. In fact, according to reports, the head of Russian central bank, Elvira Nabiulina, has stated that the trial of the digital ruble, will begin in 2022. With China's digital currency already in testing phase, Russia is also picking up the pace in its efforts to launch its CBDC quickly. Well, go for it, Russia. This is how the world is going to compete with the decentralized market. People, just that's what to expect. I expect to see a lot more countries come out saying they're working on their centralized coin. And yeah, never keep your money with that. Don't do it. That's how they track you. They use money now to keep track of labor. But with more money hiding in cryptocurrencies, they're losing that knowledge. So they're going to come up with their own coin to retrack that labor that they missed out on with the Bitcoin, Ethereum, and other DeFi crypto worlds. But yeah, that is the Russia news and what they are working on. All right, let us move on. Who's bullish now? XRP below $1. Futures open interest down by 75%. Oh, look at this little photo. We got an XRP code. Ooh, I just went to power save mode. Okay, so traders are clearly nervous after XRP corrected by 54% and the future opens interest premium flipped negative. XRP price soared 260% in April, moving from 57 cents on March 31st to $1.97 on April 14th, its highest level since January 2018. The move caused XRP futures to reach an impressive 2.1 billion open interest. However, on May 19th, as cryptocurrency markets collapsed, XRP lost 60% in 4 days, liquidating 510 million long positions. The futures open interest retraced to 550 million, roughly the same level from earlier February when the altcoin traded near 40 cents. Investors are now questioning if XRP futures will ever be able to recover to a market. Were April's figures inflated by excessive leverage, or is just a matter of time until rebounds of the previous levels? To understand if the 2.1 billion futures market was an anomaly, one needs to analyze volumes and, more importantly, their premium. This indicator measures the price gap between the futures contract prices and regular spot market. If some unprecedented bullishness was set in place, there's a good chance that futures open interest takes months to regain impressive levels seen previously. Not only would traders' confidence take longer to recover, but an exaggerated premium could have been inflating the derivatives. All right, so that's XRP. People are getting bullish from its lows going. We're going to probably skip a few articles today, and I'll come back to them because my battery might die, and I don't want to lose you people. I really don't. In this article, Ethereum co-founder slams Elon Musk's plan to 10 times Dogecoin. Pattaglia laid out his thoughts on why stealing Dogecoin or other blockchains isn't child's play. This is a great article, people. If you can go find it yourself, if this battery doesn't die, I would read it. Because everyone knew when Elon Musk was tweeting about Doge. Look at this photo. Doge in the center. Musky. Lieutenant Pattaglia. That guy, he's an alien. But yeah, so Elon Musk tweeted, as we all know, it's 10 times, but then everyone fought back saying you don't know what you're talking about, Musk, blah, 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 blah. It goes from hero to villain as crypto crash bites hard. We all know that from last week. Elon just went from the most hated man on earth as the crypto world crashed. But working with Doge devs to improve system transaction efficiency, potentially promising. This right here was a complete lie. The developers of Dodge co-founder Billy Marcus called Musk a self-absorbed grifter and disputed that he was working with developments. So this was FUD, fake news, fear, uncertainty, doubt. Elon Musk calling this. That's why people really hated him, called him as the villain. But yeah, so that is that one. But like Buterin, yeah, he called him out and he explained a little bit more of what blockchain does, how it kind of works. This is the creator of Ethereum. He is the man. He knows what he's talking about. So Muskie, he's spaceman. He did the PayPal that almost came close to blockchain technology, but he dealt with internet, not blockchain. But this guy, he did it. So yeah, good article. I'd read it if I were you. Next up, Michael Saylor's in the article. North America Bitcoin miners to form coalition after meeting with Elon Musk. Yep, so Musk is back in the news again, but this time for good. We have a picture of an engine. I don't know what that has to do with the market, but okay, yeah, we have a smooth engine running because of carbon stuff. Once again, Elon Musk tweeted and pushed Bitcoin's price beyond an important resistance area. For now, at the time of writing, BTC trades at 39,000 with a 15% profit in the daily chart. So, woo, we had a dip and now we're moving up. We're back. The cryptocurrency had a bloody weekend and it took down the entire market with it. Top projects on the ranking by market cap saw 40% to 60% corrections. Now they seem to be bouncing back with BTC's price. Most experts agreed that the crash was imminent, but Tesla CEO influence was no doubt a catalyzer that set markets on a downtrend. Musk made two crucial statements at a critical moment when BTC's price was fighting to keep support at 47,000 and 43. Okay, yeah, he first said a negative impact of it. Later, he threatened with dumping Tesla's 1.5. The crypto community went against the entrepreneur. Now, as the price struggled, Musk revealed the following. Spoke with North American Bitcoin miners, the community to publish current and planned renewable usage, and to ask miners, WW, what would to do so, or WW to do so? Potentially promising. Michael Saylor, CEO of software company MicroStrategy, claimed that he was the bridge between the BTC mining sector and Musk. According to the executive, the miners have decided to form the Bitcoin Mining Council, Saylor added. Yesterday, I was pleaded to host a meeting between Elon Musk and the leading Bitcoin miners in North America. The miners agreed to form the Bitcoin Mining Council to promote energy usage transparency and accelerate sustainable initiatives worldwide. That's WW worldwide. I'm so dumb. The organization will have support from mining pools, Argo, BlockCap, Hut 8, Marathon Digital Holdings, Riot Core, Scientific, and infrastructure and software solution based on blockchain technology, investment firm, Galaxy Digital, and Hive Blockchain Technologies. The Bitcoin Mining Council will standardize energy reporting, pursue industry ESG goals, and educate grow the marketplace according to MicroStrategy. The Bitcoin community dividing on mining initiatives. So they don't care about clean energy, they care about control. Bitcoin is one of the not highest mixed renewable energy. So this part here, right here, they're talking about. No. Am I back? Please say I'm back. Please say I'm back. Am I back? Okay. I'm back, people. We're still going to have a little bit of technical difficulty right now because I took myself off the Wi-Fi and I am really far from the connection. Go back, share screen, window. Whew, I knew this was going to happen. Okay, we're back. I think everything's moving smoothly. Okay, so I forgot where I got cut off. Sailor joined with Muskie, a Bitcoin miners association community, where they will be monitoring all the energy stuff happening in North America, possibly Canada. I'm almost over this now, but okay, let's continue on. Let's finish this strong if we can. Goldman Sachs endorses Bitcoin as new asset class. Several Goldman Sachs members, including a head of digital assets, Matthew McDormand. Goldman Sachs launched a cryptocurrency trading desk institutions earlier this month. And you got a crazy dog going, so you're going to stay with me with the news. Okay, with our last articles, legendary hedge fund manager Ray Dalio reveals he owns Bitcoin. Ooh, we got a hedge fund manager who owns Bitcoin. Way to go, he bought the dip. Who would have thought a rich person would not have bought the dip in Bitcoin? Everybody's moving into it, people. Just realize that the rich aren't not going to use this. It's going to be the future monetary asset energy of the world. So yeah, if you want to look at this article, you can find it anywhere. Ray Dalio buys Bitcoin, owns Bitcoin. It's all over the news. There's probably like 6 other articles about this. So yeah, go read it. And let's see, every 5th hedge fund already invests in cryptocurrency, like I just said. Yep, every hedge fund, every rich person, they own it. But lastly, load. Yay, that's just what we need. Digital, central bank digital currency. More ways for you to track our money. I think I was saying that with Russia, how they were starting their digital DAI. China's working on theirs, and now we got America pushing for theirs. This is just a way for the government to keep track of labor and keep an eye on you so they can tax you and take your money. So be smart with your money, people. If you want to hire me, look me up and I will teach you everything you need to know. But yeah, that is the news for today. That was a good finisher where the Federal Reserve wants to create a CBDC coin. Ugh, I don't like it. But yeah, that's the news for today. In the cryptocurrency market, Bitcoin is currently at $38,805. Ooh, we're up 11%. Ethereum's $2,640. Binance is at $374. Cardano is at $1.60. Oh, Dogecoin just keep going down. You're at 37 cents. XRP is at $1.04. Polkadot's at $24.09. Litecoin, oh man, Litecoin's at 190, 32%. That guy's been shooting. Ooh, if you got some of that, kudos. Stellar's at 44 cents. Ethereum Classic 78. VeChain is at 11, and Theta is at 724, going up. Tron's at 7 cents. Aave 394. All right, and move on. Let's take a look before we close out the fear degree index. Yesterday we were at extreme fear of 10. The markets were low, but it's really nice. And today we're in extreme fear of 22. That is really good. So for those of you who know the fear degree index, when it comes to extreme fear, that can be a sign that investors are too worried that could be a great buying opportunity. And when investors are getting too greedy, that means the market is due for a correction. So you should be very careful what you put your money in. But yeah, it's Fear to Greed Index. And yeah, thank you people so much for tuning in to another daily crypto news. There's one person on here. You got to stick around and see the horrible computer shutdown, me frantically running to get a charger. This dog is barking up a storm. Yeah, so guys, thank you so much for watching. Please give this video a thumbs up, subscribe, share with your friends, and if this gave you knowledge, awesome. So again, stay classy, people, and I will see you tomorrow. Woo! Bye, guys.